Welcome to the Cyber Periscope, the podcast where cyber insurance professionals join forces to see around corners together. A periscope, at its core, is two mirrors aligned to see what can't be seen directly. That image reflects what we do in this industry. Each of us brings our own experience, knowledge, and perspective, but it's when we turn our lenses toward each other's that the real clarity emerges. In a world where threat actors evolve daily, and surprises are the enemy of sound claims handling, the Cyber Periscope is our shared tool. Here, we bring together voices from across the cyber insurance community to extend our vision, eliminate blind spots, and better protect those we serve. I'm Pam Signorello, a partner in Wiley's insurance practice group, and I invite you to join me in building the Periscope of all periscopes, a collective view of cyber risk, liability, and opportunity. Bill Knauss, welcome to the Cyber Periscope.
Hey, Pam. Thanks for having me.
Thanks so much for joining. Before we dive into today's conversation, it's time for our first notice of fun. This is where we shake things up with a quick game to get to know you a little better.
I'm excited.
Yeah, and hopefully make you laugh.
Okay.
I'm definitely going to laugh. Think of it as your own playful version of a claim's first notice of loss, except here, nobody loses.
Okay, good.
You ready?
Yes.
All right. Your game. You didn't know anything about this.
I don't know anything about this.
That's what's going to make it fun. Your game is word association.
Okay.
Okay? So I'll say 10 words one at a time. You tell me the very first word that comes to mind. No overthinking.
Okay.
Ready?
What happens at the end?
We all win.
We all win. The world just gains a little bit of insight into how my brain works. Okay.
Exactly.
Good.
All right, you ready?
Yeah.
Phishing.
Line.
Even though fishing is PH?
I was thinking of the animal.
And that's fine. All right. Firewall.
Firewall. Bricks.
Insurance.
Money.
Password.
Joke. And I can explain that one.
Go for it.
Okay. So I was driving to work. This is probably 2 or 3 years ago, and was listening to the radio, and they were talking about the joke of the year. And the joke of the year, I'm going to botch it here, but it was that there was little Billy was going to school and had to come up with a password for his email account, and was just struggling over and over because all of the passwords kept getting rejected because they were too long. And so he asked his teacher, well, I can't think of anything else that works that's short enough. And the teacher said, well, what are you trying to input? And he said, well, I was trying to use Snow White and the Seven Dwarfs because that was the only thing I could think of that was 8 characters.
You're a dad, huh?
Kind of botched it.
That's a dad joke.
That is a dad joke. But I thought it was funny.
It's a good one, though. I like it. I like it. All right. Moving on.
Okay.
Coffee.
Daily.
Malware.
Evil.
Vacation.
Fun.
Not evil.
Not evil. Yes.
Encryption.
Encryption. Secure.
Claims.
Occupation.
Last one.
Okay.
Dog.
Hairy. I'm allergic to dogs. So
that explains
my
it.
fears are realized.
All right. That wraps up today's first notice of fun. Thanks for playing along, Bill. I think our listeners are going to enjoy your answers almost as much as I did. Now let's get into the heart of the episode. NetDiligence recently issued its 2025 Cyber Claims Study, 77 pages of solid cyber claims info. I know I look forward to its release every year. How about you?
Yeah, it's always interesting to read because you see the high-profile data security incidents in the news and then, doing what I do every day in the world of cyber insurance claims, I have my view of the world, but it's always so interesting to see totally zoomed out how huge the cyber insurance industry is and what sort of risks are developing, growing, how expensive they are. It's just a massive risk, and I'm glad that we have an insurance product that addresses that risk.
Awesome. Surprise, ransomware continues to make up a disproportionate amount of cyber claims, both in terms of number and average cost per incident. I'm sure you didn't see that coming.
No, ransomware has been at the top of the list for a couple of years now. Definitely no surprise there. I think one of the big factors that drives that average cost for ransomware is that it's a first party and a third party risk, meaning that an insured can incur its own costs due to a ransomware event and then also be subject to third party liability in terms of claims, lawsuits, demands, regulatory actions that may come as a result of the ransomware incident. So, yeah, no surprise there.
Yeah. So I'm sure we'll have ample opportunity to talk about ransomware in future episodes. The other causes of loss rounding out the top 4, though, include business email compromise, which comes in as a second in terms of number and cost, wire transfer fraud, and hacking. And because each one of those categories can often does involve social engineering, I thought we'd spend some time today talking about an important decision issued this year in an insurance coverage case involving both social engineering and computer fraud coverage. I think you know the one?
Yep. Office of the Special Deputy Receiver versus Hartford Fire Insurance Company et al.
Right. And we'll include a link to the case in our show notes. But before we dig into that decision, for the benefit of our newer listeners, do you want to give a 20-second description of social engineering?
Sure. So, like the name implies, social engineering involves the use of social or psychological manipulation to obtain information or access from someone that then can be used illicitly. Common social engineering methods that you may have heard of are things like phishing, smishing, and vishing, and even spear phishing that we'll talk about in a minute here. The idea is that a threat actor lures a victim to click a malicious link or disclose information by email, text, or otherwise, and then use that information to their criminal purposes.
Perfect. Yeah, social engineering is often considered one of the most effective and dangerous cyber attack methods, particularly because it actually bypasses traditional security tools, right? Because the target itself grants the access to the threat actor. And it's the threat actor's engagement of an otherwise innocent person in the fraud that can complicate a cyber coverage analysis. Which brings us to the case at hand. In the Office of the Special Deputy Receiver case, the Federal District Court for the Northern District of Illinois addressed the issue of, quote, direct loss in the context of computer fraud coverage. And more specifically, the question before the court was whether loss is incurred as a, quote, direct result of a computer crime when there is some intervening human element. In that case, it was an employee effectuating a transfer of money instead of, say, a hacker installing code that forced the transfer.
Yeah, the question of direct or the interpretation of the word direct comes up a lot in cyber insurance. It's a word that we see all the time in cyber insurance policies. And just to give a little bit more context, the incident in question here involves a spear phishing attack against the CFO of a company. The spear phishing attack targets a specific individual, in this case, a CFO who presumably had access or knowledge of money that the cyber criminal could then try to take. So in this case, The CFO did fall victim to a spear phishing attack, and his credentials were compromised. So the cybercriminal gained access to the CFO's email account. The cybercriminal set up email forwarding rules, and then, now impersonating the CFO, got employees of the company to issue payments from accounts belonging to a couple of insolvent entities that the insured was managing during liquidation. So that's the factual background of the case. There were two insuring agreements under the cyber insurance policy in question here. One of those insuring agreements was for social engineering fraud, and the other was for computer fraud. And the cyber insurance carrier recognized coverage for social engineering fraud, declined coverage for computer fraud. And this is where the discussion of direct comes in, because the carrier said, okay, well, the policy language for computer fraud requires that the transfer of money happen as a direct result of data entry by the cybercriminal. And the carrier said, okay, well, that didn't happen here, because yes, the CFO was duped. Yes, there were email forwarding rules set up. Yes, the cybercriminal sent emails from the CFO's account, but ultimately it was the employees of the insured company that issued the payments from the accounts belonging to the insolvent entities.
One of the main takeaways from the court on the direct loss issue really is that the concept of direct loss does not require, right, that the underlying computer fraud be the sole cause of the loss, so long as it was, in fact, a direct cause of the loss.
Yeah. Well, there is differing authority between jurisdictions on the question of direct loss. A direct loss could mean proximate causation, and there's authority for that. There's other courts that use a narrower definition of the word direct. In other words, that direct means, no intervening causation, immediate cause and effect. And the insurance carrier cited an Illinois appellate case called RBC Mortgage for the proposition that a direct loss is much narrower than proximately caused loss. But in this case, the court found RBC Mortgage to be distinguishable and ruled that the loss was a direct result of computer crimes, even though it was an employee of the insured and not the cybercriminal that triggered the payment. So, yeah, in this case, the court did find that there was a direct cause and used an interpretation of direct meaning more along the lines of approximate cause.
It almost begs the question why the word direct is in the policy. Though.
Yeah, certainly.
I mean, not why it's in the policy, but why a court would read it out of the policy in a sense.
Yeah, certainly there's other authority that supports the idea that direct means exactly what it says. Direct, no intervening causation.
Another important issue that the court decided in this case is one relating to mutual exclusivity, specifically whether the social engineering coverage under which the insured here did in fact pay its sublimit toward this claim is somehow mutually exclusive from the computer fraud coverage.
Right. So based on the specific language in the cyber policy, the court held that the two insuring agreements under which the insured sought coverage were not mutually exclusive. The policy divided social engineering coverage into two parts, Part A and Part B, and the insurance carrier recognized coverage for social engineering under Part A, which is where the insured organization receives fraudulent instructions from a cybercriminal. The policy specified that Part B of the social engineering coverage could not include a claim that was also covered under the computer fraud coverage. But the policy did not include the same limitation about Part A. Namely, the policy did not indicate that Part A of the social engineering coverage could not include a claim that was also covered under the computer fraud coverage. So, because the policy was explicit that Part B of the social engineering coverage was mutually exclusive from the computer fraud coverage, but was silent as to Part A, the court inferred that there was no mutual exclusivity between Part A of social engineering coverage and computer fraud coverage.
So for a claims handler, right, analyzing potential coverage for one of these matters or something along the lines of one of these fact scenarios, necessary practices, right, is to consider all potentially relevant insuring agreements and not rest after finding that perhaps one may have been triggered.
Yeah, and I think this is why we as coverage attorneys probably find ourselves in the position of drafting 20-page coverage letters is because you can find yourself in a position of looking back after the fact, discussing coverage under a part of the policy that may not have been immediately obvious, and instead of addressing each and every insurance agreement that may potentially apply up front and putting those positions out there and giving the insured a chance to review and respond to those.
Yeah, because you and I live all things cyber insurance coverage every day, we maybe sometimes lose sight of the relative newness of cyber insurance. But the truth is, cyber insurance is a relatively novel product. And as a result, there aren't yet a lot of court decisions interpreting the coverages provided.
Absolutely. We're still in a state of play where every decision necessarily deserves our focused attention, particularly as cyber threats are rapidly maturing and evolving, and the language and scope of cyber policies are doing the same in tandem.
Bill, thanks so much for talking through the Office of the Special Deputy Receiver decision with me today. Although, as with all cases, the decision was, of course, fact-specific, it adds to the small but growing body of case law in this context.
It does. And really, each decision issued in the cyber context now can be influential in shaping the understanding of the scope of these policies for insurers, policyholders, and brokers. It was great to join you today.
Thank you for joining me on the Cyber Periscope. Just as a periscope works by aligning two mirrors, this podcast works because professionals like you are willing to share your experiences, insights, and perspectives. Together, we create a clearer, wider view of the risks and opportunities that lie ahead. If you found today's conversation helpful, I encourage you to keep the dialogue going with your colleagues, because the more we connect our lenses, the fewer blind spots we'll face as an industry. I'm Pam Signorello, and I look forward to building our collective Periscope with you next time.